You can't have failed to notice that at the moment things seem to be getting more expensive. In fact, let's look at this chart to see how much more expensive. Inflation hit 7% in December in the US. That's the highest rate in almost 40 years. In Europe, it was at about 5%. Now, why is that? In order to encourage economic recovery coming out of the pandemic, both central banks and governments have been pumping a lot of money into the economy, trillions of dollars. A lot of that money ends up in people's pockets. They can go out and buy things. But at the same time, you have supply chain constraints. You can't get all the products that you might want. So if you're in the business of selling something, the things that you can sell, you sell a bit more expensively. Now, what's the effect of that? Let's look at this chart from the US. Electricity and food, both about 6% more expensive in December than they were a year before. Let's look at gas prices. That was almost 50% more expensive than it was a year earlier. What can be done about this? Well, the Fed can decide to stop buying as many bonds as it was previously, that $120 billion a month. That's known as tapering. It can also think about increasing interest rates. That makes it harder to borrow money that therefore can't be pumped as readily into the economy. But it's a difficult decision to make because it might also mean that it stops some of that economic recovery dead in its tracks. It's a conversation that central bankers are having a lot at the moment.